Hello and welcome back guys to the channel, and on this video guys, it's a special one, right? I'm gonna be teaching you guys how to day trade by only using two time frames, right? The first time frame being the 1 hour time frame. Like you can see here, I'm on the pound Canadian dollar on the 1 hour chart, and the second time frame we're going to be using is the 5 minute time frame for entries and confirmation, of course. So first thing is first, right? We need to have our guidelines, right, of how the strategy goes, and our guidelines lie the same always, each and every day, right? We need to see first a structural narrative, second an S&D zone, and third our confirmation, right? This is the root of how we trade, how we always trade regardless, right? So first thing is first, right? We need to have a structural narrative. So I'm just gonna scroll out a little bit and see the previous price action move towards the current or present price action movement. Now, as you can see, since these breaks here, we had this series of a bearish trend, right? This series of constant lower lows and lower highs being presented up until this area here, when we saw that price managed now to break a lower high to form now a new higher high. So with that being said, this right here became our break of structure, and this is what rose the interest, right? So from there, we can just term this as a break of structure. And from that break of structure, so let's just zoom in a little bit. From that break of structure, we now knew that price was pretty much ranging, right, from this low here, this strong low that managed to break this weak high here, and then create a new weak high, right? So we're pretty much in a range of this to this area here. Now, so if we're in a range like this, right, when we have a high and a low, and you know that we know that this high right here is our overall next liquidity run, right? And this high in this low here, sorry, this low is our currently protected low, right? And what do we mean by a protected low, right? If price is going bullish like this low right here becomes a protected low, and this high right here becomes a next liquidity run. Because if price wants to go bullish from here, then we should never see this low get taken out unless it's only a wick just coming a little below, which we know that's absorption. It's a simple liquidity grab move, but we should never see this low here taken out by a body of a candle closing below it, and because that would mean that price is practically shifting from bullish to bearish. But instead we should only see something like this through the lower time frames, a down move towards an area of demand in which price is going to accumulate and then run the highs, which are the next liquidity runs, right? So from that, this overall schematic here is what we were expecting to happen down here. So let's remove this and head back now to our chart. So from there, we need to have, so first thing is first, our structural narrative is now complete. So we need to see what we need to see now, our S&D zone, and then the confirmation finally. So from that S&D zone, now since it's a bullish market, we will be more focused on seeing a demand zone or a bullish order block, from which price would most likely go to retest and then accumulate from there, giving us that entry to the top side. Now from our analysis, we had this low here as that demand zone, or that bullish order block, right? As you can see, so price comes back in, retests it, right, accumulates, makes this internal break and retest, which is what confirmation entry, right? So this was practically the entry to the top side. Now I'm not going to be speaking about this entry here, but I'll be speaking about this currently entry here. So price from here, price just went up and then failed now to break this high due to this very strong area of demand, right? I mean, sorry, this very strong area of supply right here. All right, so price just came in, as you can see, only wicks, and then distributes down again. So yet again, we're obliged to find that area that could be a momentum place, right, for the buys. Because what happened is that price failed to break here. Why? Because the institutions were not pretty much focused on taking out this high, but they were rather focused on closing their orders in here, right? Because this area of demand here points what? As you can see, from this wick here to this low here, it's a very, very strong sell, right, to buy, which means which means that smart money sold this area in a very high momentum, right? There are very strong and very many sell orders in that area to force that market to make that mitigation and then buy it very even stronger, right? To go and take out the highs. But as you can see, so this place here is where the bank orders lie, right? They sold very hard in here, meaning what, they still have positions opened in very big losses, right? So they need to take this market down, right, to mitigate those orders and close them at break even before this price could now shift and go overall bullish to take out the overall highs. So that's the current secret, or that's the current scenario that's just going on with this market. So so price comes down to that area of demand, right, and then mitigates it. And after that mitigation, as you can see, price then accumulates, right? So our our point of interest, which is this 1 hour order block or demand, has been touched. So once this has been touched, we now shift to the 5-minute chart, and from there there are certain things that we'll be looking to see, right? What we want to see from this area is a potential accumulation, right? Accumulation. And once that accumulation has been done, because we know that accumulation builds liquidity on both sides of the market. So there's buy side liquidity here and there's sell side liquidity here. So what we need to see this market do is take out this sell side liquidity and the buy side liquidity, right? Which means what, it will be a attempted break bearish to form a new low, and then an instant break bullish to form a new high, right? This is a very, very strong sign of a very bullish market. And from there, we'll need to see that pullback happening towards an area of demand, and then a run now to the bullish side, right? To take out the overall highs. And the same applies to a bearish market, right? If we had a bearish market and we had an accumulation like this, then we would mostly like to see a break bullish, right? Like I said before, sorry, an attempted break bullish, right, to form a new high, and then an instant re-break bearish to form a new low. And from there, we can now position ourselves off of the area of supply that requires mitigation towards to have our orders and run the overall lows, right? This is a very powerful schematic to understand as a day trader. So from that, let's see now what happens. So in towards coming to the zone, right, as you can see, so price makes a low, a low high, a low, right, and then the accumulation starts. So we're pretty much ranging from here to here. Now as you can see, right, the accumulation goes, and then breaks, right? So this is like in the mid London session on Thursday, right? And then reaccumulates again, and then distributes heavily to the downside, taking what, this sell side liquidity lying below what, these lows here, right? Because we know that this is sell side liquidity, and then price instantly comes and breaks bullish once again to form this high, running all this buy side liquidity here, right? So as you can see, the beauty of understanding structure and liquidity is very important as a trader. So after the formation of this high, here from this low here, we now knew that this market is a very, very bullish market. And then the last thing that we needed to look at is basically a pullback and towards an area of supply that requires mitigation before this price can funnel to the top side. So our area of demand, or a bullish order block at that time, was potentially this little man in here, right? So let me just zoom in so we can practically see it, right? This last sell to buy candle, right? As you can see, this pivot of the wick, like I said before, the pivots have a very, very strong meaning, right? So this was the last area that smart money sold very hard and then bought even harder to come and form the new highs. So this is where our entry pretty much lied. So we just put this right here and name it entry line, right? And name it entry line. So with this being now our entry line, let's just make it a little more observable, right? So with that being our entry line, we basically just had an order in this entry line here, which price came down below and tapped, as you can see, and then this market could now just funnel to the top side. And of course, in this trade, I particularly had two take profit targets. The first one being this take profit target right here, because I know that this high stands as liquidity, as it failed to come out and take out this high, as well as it failed to take out this low here. So it's a weak high, and there's basically just liquidity on top of it. So with this being a liquidity high, that's where my take profit target number one is, which is 200 pips, and my second take profit is just 243 pips. Now, of course, this is where I'm first lying, since it's not yet being hit. So my trade at the moment is already break even, just at the break of the structural high here. My trade goes to break even, and of course I just had a 12.8, let's just name it a 13 pip stop loss with a 200 pip take profit target to make it an overall 1 to 15 RR trade. Now I hope this video was very informative to you guys, especially if you are a day trader, and if it did, then don't forget to like, subscribe if you haven't, of course turn that bell button on for notifications, and until the next one guys, stay safe, have a nice trading week or weekend. And until the next one, guys, peace off.